Hey everybody, thank you for joining us today. Tradershark.com. We talk about trading the S&P futures. And let me go ahead and go into this. A lot of you have seen me before. We've talked about time as a way to trade. We're going to talk about how to avoid the choppy markets. I mean, today, the volatility of these last few weeks has been amazing. So a lot of times you're going to be sitting on your hands. I'm going to show you how to do that. I'm also going to show you how you can take advantage of following the market and the trend. So learn how to day trade the E-mini S&P futures. I want to thank Investor Inspiration for allowing me to present with them today. And today we're going to talk about how to avoid the chop. Now, initially this was created as how to avoid becoming chum, right? You'll notice Trader Shark, what my website is oceanic themed. We have shark attack trades, we have wave trades, things like that. So you're going to see a brief acronym for chum here as we come up. Disclaimer, obviously, no matter what you trade out there, please consult your financial advisor before using real money. I always suggest people do sim trading and paper trading, whatever, prior to using real money. You've got to do that because you could lose all or most of your money. This is me. That's kind of an older picture of me. I'm 54 years old. I have been a trader for over 25 years, stocks, options, Forex, and futures market. I used to trade the Forex, but I just got tired. I had monitors in every single room of the house. And that drove me crazy. And stocks, there's just so many options. There's so many options. The futures market was more of a mutual fund, a little slower mover. And I had an opportunity to take advantage of that. And that's how I came up with Trader Shark. So I was a mortgage broker for over 20 years, familiar with the treasuries markets and how those will affect interest rates and the movement of stocks. Former U.S. Army officer and a medevac helicopter pilot. Also, I am a professionally trained life coach. A lot of these people tell you that they're coaches, but they haven't had any, I was trained by one of the best in the industry. I cannot mention his name for marketing purposes, but you may recognize his name somewhere in the slide presentation. My objectives today, I want to create a core group of like-minded traders helping traders. A lot of people are afraid of having the other traders input into the room. I want people to input in the room. I want to ask questions. I want people to contribute what they're finding. Apply commonly used indicators to trading futures instead of having to have proprietary indicators. We do have one set. It's called the Shark Bands, but aside from that, you don't need those to trade. And you want to do it inexpensively, right? Because when you're first starting, it's expensive to trade. So that's one of my objectives I saw when I was reviewing all these other trading rooms. I want to help reduce one of the biggest injuries to most traders, and this is called overtrading. That shouldn't be a surprise to anybody. We want to slow you down and think before you click. Sometimes we could sit the whole day with no trade, and that's not always good to hear, but it's the truth. Sometimes we can knock out 8 or 9 trades, but you're averaging maybe 3 to 5 trades a day, okay? And we only trade 2 hours from 9:30 to 11:30 in the morning, which fits a lot of people's schedules. Provide a unique trading environment and a live trading room for new and experienced traders. We have people that have been there with me for 7 to 10 years. Other people come in for a couple months and then they return. So I think that speaks highly of the room. What we're going to learn is how the sharks on Wall Street lure unsuspecting traders into choppy waters. It'll all look very familiar here when you look at the screenshots. How to use unique combination of indicators that most people have on most of the trading software out there. How to avoid emotions. Look, everybody's going to tell you avoid emotions when you're trading, but rely on your indicators. Trade what you see, not what you believe, right? Trade what you're seeing on the screen because your emotions are telling you something different. The traders on Wall Street, the computers, they're designed to get you out of good trades and into bad trades. Does that make sense? We're going to take these key lessons home with you. I'm going to show you some indicators today. This is, I wanted to call it a presentation called meat and potatoes, right? None of this sales, I'm not going to give you a big sales pitch. If you like what you hear, you can come and pick up the manuals and join us. If you don't, at least I'm going to give you some indicators you can take home today and adjust the settings to fit your trading style. Protect the capital and keep it from becoming shark bait. Try to make it fun, right? They say a good trading is a boring trader. Not necessarily. Shark bait is what we use for the word chum, and I'm going to tell you here in a moment. I think this is the most powerful question you should ask everybody before you start following a trader or a mentor or a coach. If your trading system works so well, why share it with others, right? Why not just become a multimillionaire just trading your own system? And this is a very valid question. I'm an extrovert by nature, right? I'm out there talking and stuff. If you stuck me behind a computer screen without talking to people, I would go crazy. It's called going postal, right? I enjoy talking to people. And success comes from a team approach. So I learn so much from what other people are contributing, as well as what I read, as well as people want to share their screens in the room. I don't have any problem with that either. Traders helping traders, that's the key. No matter what room you join, make sure you're getting help from the support staff or from the people in the room. And you know what? There's a thing in life called contribution and giving back to those people less fortunate. And I support Russell Home for Atypical Children and Clean the World. So let's take this step by step. Those of you that have seen my presentation before have seen these slides, but they're right. After you place a trade, what is it that you feel? Do you feel frustration? Is that an old laptop or what? Look at the thickness of that laptop, right? This is the way we feel after we place a trade. It doesn't matter. We can have all the confidence in the world, but when you place it, if you feel like this, something's missing. And if you go, oh, I don't know if I got in long or short, I don't know if I'm going to make any money on this. This is the way we feel. This is a natural emotional. That's why I suggest in the trading manuals, I'm going to walk you through step by step on how to sim trade your actual trade setups before you actually use real money. And you're going to use probabilities and statistics. Nobody likes to hear those words, but you've got to do that in order to place a trade, and you let the trade take care of itself. You're either going to be profitable or you're going to take a loss. And you'll notice, I think today I took a full stop out, which is kind of rare. I took a full stop out today, and not a flinch in my emotion at all. It's part of the process. Actually, I look at it differently. It's how you view it. I viewed it as, okay, I got that behind me. Now I'm successful for the next couple of days, right? So what is chum? I know it's a weird word. I had a presentation before. It just didn't get a whole lot of popularity. So that's why I said avoid the chop. But chum is what? Costly, habitual, underperforming moves. That makes sense, right? You don't need to remember that. Just something kind of fun, right? What is chum? This is chum. Chum is what you feed to sharks and larger fish. You take the smaller fish and you feed them out, right? Do you think that this is chum as well? Do you think that maybe all of us traders out here, inexperienced, are waiting, being waited on the professionals, institutions, and computers to take advantage of us, to take our money? We could, in effect, be called chum, right? Or suckers, right? What do they say? The first half hour of the trading day, they call it amateur hour. So be careful trading that first half hour, first 15 minutes of the day. If you're experienced, by all means, take advantage of it. If you're not, I like to sit back and determine when these professional traders are going to take advantage of the market. So how do we know, now that we know what chum looks like, people, fish, right? How does that apply to trading? This is a bait ball, okay? Again, it's just fishing. It's kind of fun. Have you seen this? If not, Google this. This is bizarre, right? It's really fascinating. But this is waiting for the sharks or the bigger fish to shoot into that bait ball to get their feed, right? And so that's what we have the money. We're trading. They're waiting outside to try to take our money. And they're going to do that with setting us up, again, trying to get us out of good trades and into bad trades. Do you think, it's called a bait ball, right? This is a bait ball. Now we've got a visual association, something small. Don't worry about the price action on the right-hand side. I'm going to show you some current screens when we get to the end. When we have this sideways motion, do you think we can determine with a couple indicators how not to be buying and selling in this range? This is chop, sideways chop. It can also be called what? Consolidation, accumulation. They're certainly different. Consolidation once you break out of a range, accumulation before you enter into a new trend. But this to me is a bait ball. So they're circling us. You can see you start to get short, everything looks great on the indicators, and then they rip it against you, and then they rip it against you again, and then they rip it against you again. This, a ninja bullet, whatever you want to call it, a blender, this is a bait ball. They're taking advantage of us. I have a friend also here, I live here in Central Florida, that works in a shop, and he places 300 trades a day. 300 trades a day. And that's fine. If that works for, every type of trading system is going to speak differently to every other individual. But 300 trades a day would drive me crazy. I'd have more gray hairs than I have now. So think before you click. This is also another bait ball. So we don't know when a breakout or shark attack is going to occur. Okay, let me go back 1 second. This is the opening 15-minute range of the trading day from 9:30 to 9:45. Do you think that if you're trading in the opening 15-minute range, that may be a little cautionary area to be aware? Wait until you get a breakout. Well, how do you know if you're going to have a breakout? That's what we're going to explore. So This is a bait ball. Not too graphic of a, this is a, I don't know, it's like a whale shark or something coming through. They break up that ball. Everybody gets all frantic. They sell too high. They sell too low. They take a loss. They hold on to losers longer. This is what a shark attack is similar to, right? How do we avoid getting chopped up on days like these? We don't know what's going on the right-hand side of the screen. Nobody does. What are we looking for? 5 key observations, Globex range. What? What is a Globex range? Do you mean the S&P future is actually trading overnight? Yes. A lot of people don't know this. So before, right here, this you don't see a vertical line here, but where the yellow line starts and the blue line ends, the blue line is the Globex range. From the close today until tomorrow morning's open, right, going through the Asian market into the European session and then into the US market, that's when the S&P is trading. Do you think it's important to know the range or the Globex range? Today, the Globex range was 12.5 points. Do you think it's important to know what the range is for the opening 15-minute range? Today, our opening 15-minute range was 7.5 points. Do you think that's important? Well, if I'm talking about it, it's pretty important. I want you to be aware. This is some of the things I want you to take with you tomorrow. When you trade, the Globex range, we're not really looking at the Globex range. Before 9:30 we come in, right? We're doing a little bit of pre-market planning. Find out what this Globex range is. Do you think that if this Globex range is really wide, that it may lead over into the US market and give us a really wide or potential breakout day? The answer is yes. If you have a narrow Globex range, narrow, and you have a narrow opening range, do you think that maybe that would be more of a choppy market? The answer is yes. So if you just know these little tidbits, I mean, that's what it is. People are trading, they're experimenting with different trading rooms, different websites. If you can glean one little nugget of knowledge from each one of these different traders and you formulate your own trading plan, this is one that I would suggest you watch. The Globex range from overnight. Today it was 12.5. I don't know what it's going to be tomorrow. Ooh, look at this. So we've got a broader Globex range here. In this situation, it's running from 22 to 32, 11-point Globex range. That's nothing these days. But this pattern, I want you to look at the opening range versus the Globex range. These cyan colored lines, or these light blue lines, are the Globex range. From here to here is what happened from from yesterday's close until today's open. It's important to know this range because this is going to give us a potential extended range when we open the next day. So far, so good. I told you it's going to be a meat and potatoes type of seminar, right? So what we're doing is we're putting 2 and 2 together. We know what the Globex range is, but the opening range is pretty important to me. So this time frame from the start of these dashed yellow is the opening 15-minute range. If I know that I've got a wide Globex range, do you think that's pretty important so I can know that I may be getting a breakout that day? You bet it is. If I'm mentioning it, it's probably pretty important. So opening price. Well, we kind of talked about that a little bit. Let's look at this. Opening price. Do you think opening price is an important number? Yes. How many people are taught in their seminars and webinars to fade the open? What does fade mean? Fade means if price action is working its way up to the open, you're going to fade it and sell short. A lot of people are told that. We have very specific rules on how we deal with opening price. We want to use that in our benefit when we're trading during the day. So if this is the opening price and we put the opening range on top of it, we kind of know that this is going to be a little bit choppy, right? Look, did this opening price hold? If you come below opening price and you work your way, did this hold? No. A lot of people got short. They ran it through. Did this hold to the downside? No, it didn't. Have specific rules. Apply the same thing you're taught from these other rooms, such as what the opening price is. Just be aware that if you get in this situation, if we get a good 4 points away, then and only then will I consider opening price as a support or resistance level. Interesting. Wow, all these lines and colors, Brian. What's going on here? This is beautiful. Look at the white line. The white line is the opening price. Do you think that when they opened up this morning, this sideways chop, you can see the wedge. You can see the wedge. How do you know you're going to get a breakout? Very standard, very basic wedge patterns, right? If you get a breakout of this support line here to the downside, you're not just going to buy or sell, of course, but you're going to use a supporting indicator to help support the move in that direction. And I'm going to show you how to do that. So here we've got a nice little wedge pattern, and hey, this is I don't have the price on this, the dates, and this was the entire day. But what happens here, I want you to notice these colors. See how they turn gray and then they turn red? Okay, I want you to keep that in the back of your mind. You know what? I'm going to go back to that screen one more time as well. What are these lines? I'll tell you more about that tomorrow for you joining us in the Shark Den. We got a free trial going on tomorrow morning from 9:30 to 11:30. Come on in and check us out. This is what's called an hourly range high. This is called a Globex range high. I'll explain that more in detail tomorrow. I want you to be aware. Ooh, you just said the word Globex. I did. A Globex range, if it's 12.5 points, I'm going to add and subtract that from the opening price. Another nugget. This line is the Globex range added to the opening price. Ooh, who do you think watches those? The bigger bankers. You bet. Central American bankers watch these levels. That's why we're using them, okay? Opening range. Wait a minute, I've seen the yellow lines. I've seen the white lines. We've got an opening price. We got an opening range. Do you think that if we have a wide opening range, right? If the opening range is really wide, let's say the opening range is 12 points. Within the first 15 minutes of the trading day, I know it's going to be relatively choppy. I prefer a really narrow opening range. Then I know they're going to break out in one direction or the other. Wow. How many people actually knew that? Look at this. Narrow opening range. If they're sideways consolidating, taking your money, taking your money, taking your money, this looks like it probably went before they got a nice breakout, almost 11:15 in the morning. Oh man, Brian, you're saying I got to sit there from 9:30 to 11:15? Yeah, I am. Yeah. You got to sit there and watch because you got to be in it to win it, and you got to know when. I only trade generally from 9:30 to 11:30. If there's no trades up till 11:30, then yes, I'll try to stay in and trade up through the lunchtime trading zone, which is exactly, is exactly what you're seeing here. There's your nice breakout. Did they break out of the opening range? Yes. Did they pull back and they continue? Yes. This is called a hook pattern. I'll tell you more about that in the Shark Den. So, advanced decline line. Oh, another indicator. Yes, one of my favorites. The advanced decline line. This is my second favorite. I actually have the average directional index, and we're going to talk about that. Advanced decline line, not a whole lot of weight to be put on this. Put it over on the side, let it sit there. But do you think that I have these colored yellow for sideways chop, messy. If you think that price is in between the advanced decline, or the advanced declines between plus and minus 400, do you think that maybe that's kind of sideways motion, not too many people are interested? Yes. You break up above this 400 to 800, you're going to start to see some colored, on my chart that I have, the colored dots will kick in, they'll go green, right? And then you break up above this 800, you're going to get big bright green, and that means that they're coming in force. Nice to know, right? Well, so how do we trade that? Hold on a second. I want you to notice the yellow lines, right? Any trading room you go into, you're not going to just come out trading the first day. It takes a little bit of time, right? You don't go into a pizza shop, buy a pizza shop, and then learn how to make pizza the first day. What you do is you go in there and you watch other people, and you learn, and you observe. What we have right now, you got a lot of pretty red lines, pretty yellow lines, and pretty green lines. Yellow is cautionary. Red is selling. Green is buying. Pretty basic, right? But if I've got gray, some of these are moving averages. If they're gray, that's called a tangled net. A tangled net. Basically, it's talking about different time frames that are all within about 6 ticks of each other. Wow. If price action on the higher time frames is waffling between 6 ticks, do you want to get into that market? No. Do you think that this advanced decline is telling us to stay out? It's giving us a little bit of a calm, hey, I know I shouldn't be doing anything. Maybe I'll go get another cup of coffee type of stuff, right? Do you think if the market or the screens can tell you that, it gives you a little bit of peace of mind, right? Kind of reduces the increased heart palpitations and the sweaty palms you get when you place a trade, right? Tangled net. We talked about this. Tangled net's nothing more than you can use several different time frames of moving averages, but when they all get to within a certain level, if they're all within certain parameters and they turn gray, that's a visual representation for me to go, you know what, I'm not really interested in trading this market. I can't get a runner. That's a fair answer too, right? So we're kind of accumulating this up. 5 key observations. You got your tangled net. You got your opening price. We're going to review this in a second. And I'm sure this is being recorded, so you'll get a chance to go back and listen. I know I talk a little bit fast. I'm originally from Western New York, but I got a lot of information to get out there to you. So the moving averages, I want you to see, they're colored. Ooh, this is great. They're colored red. You're going to be looking to short. They're colored green. You're going to be looking to go long, right? We are visual representing people, right? We see things. We react based on what we see. So if we turn gray, it's a good opportunity for me to get out. So this is called moving averages going to a tangled net. When they start to turn gray, just be aware. I'm not saying don't trade. I'm just saying be aware that it's going to be a choppy time frame. If you're going to chop it, you may want to, if you're going to scalp that type of trade, you may want to limit your target levels, right? Instead of 6 or 8 or 12 ticks, you may want to limit it down to 2 or 4 ticks, right? So ADX DMI, this is my favorite one. The ADX DMI is down here below. The cyan colored line, this is stuff you can take with you as well, right? Cyan color, the ADX. These red and green are called DMI, Directional Movement Index. That's an awful lot, Brian. It is. It's something we worked very hard at to create. When that ADX drops below the threshold, different people have different thresholds. Here, this is 15. Sometimes my threshold is 10. When it drops below the threshold, stop trading. Get out of your positions. They've just decided to go into chop mode. Wow, that's pretty cool. It's a visual indicator, and I know that if I drop below that threshold, I want to see the ADX inclining. I want to see it coming with gusto, higher, and I want to see the DMIs either green on top, meaning bullish, or red on top, meaning bearish. Then I know what direction to trade it. So I'm showing you here how to put these together. Price action sideways, it's still stuck inside the opening range, and down below, we're below the threshold. I wouldn't trade it. I don't trade it, right? Ooh, look at this. So how do we get a breakout? Look at how the ADX is inclining. It's inclining. I'm actually giving you an educational webinar today. Unbelievable, right? ADX is inclining. The DMI is bullish on top. And look what's happening to our price action, right? It's to the right-hand side. But do you think that this is giving us a little bit of a heads up that we may be able to see this in price action? That's how we're going to take advantage of it. That's how we're going to learn how to enter and exit the trades. So this is another great opportunity. Now you'll notice they are not on the same chart. They are completely separate charts. That's why these vertical lines are in different locations, but these vertical lines line up with the correct time frames. So if at 11:15 we get a nice cross or we see the DMI on top, I'm looking bullish at this point. What do you have? An intended direction, pullback, and then breakout. Do you think that I'm already getting supported with this breakout here? You bet I am. Do you think it's a good idea to stay on this trade? Stay on this trade while the ADX is inclining. Stay on it, stay on it. You get some flinches here, time to get out. Look where it exited, right there. You're going to get a red candle probably before. It'll give you that heads up. So how do we make money? I mean, now you've got some great knowledge, some great skills. SOH, really? Sit on hands. Sometimes you got to do that. Today we had to do that a lot because we couldn't get any clear direction. Indicators were off a little bit. You know, that's going to happen. Jesse Livermore says what? Throughout all my years of investing, I found that the biggest money was never made in the buying or the selling. It was made in the sitting or the waiting. So when you wait for the trade to come to you, more confidence is ensued. And then as you buy and sell your orders, that's how you build your confidence. That's how you build your portfolio and your bank account. Well, let's simplify it. Again, I'm all about visual representation. What is this? This is a steering wheel. You think it's a directional? Directional, yeah. So, a steering wheel. What is this? This is an accelerator. What are you talking about, Brian? A steering wheel and an accelerator, or a gas pedal. Do you think we can apply this to indicators? You bet we can. And ADX is a directional indicator. If the ADX is inclining, it's going to be, and you got a green DMI, it's going to be bullish. If it's inclining and it's got a red, it's bullish. If it goes flat and goes below, it's driving straight. It's not going left or right. So we use a steering wheel. Now, do we know it's going to accelerate? We don't, unless we add what? Momentum. Now, you can use all kinds of things for momentum. You can use a stochastics. You can use an actual momentum indicator. You can use CCI. Your choice. I actually use the CCI. I'm very fond of it. Master the basics and you will master the art. Now, how do we put it all together? Let's do this again. Repetition is the mother of skill. Tony Robbins. one of the world's greatest life coaches. Imagine that. So 5 key observations. We're going to do this again. Globex range. Think about that. Opening price. Think about that as well. Opening range. Nothing too complicated, right? We're watching the range from what happened in the past, the Globex, to the opening price right now, to the opening range, which stays with the chart the whole day. Advanced decline line. Well, I don't have an advanced decline line. Well, you can use the NYSE tick. You can use something very comparable, right? The ADX, DMI. This is great. You got to make sure you get this on your chart no matter what you're trading. It'll give you, a lot of people like to watch volume. I'm telling you to be aware of the ADX, okay? Well, how does this, let's do it again, putting it together. If you've got a narrow Globex range and you've got a narrow opening range, the tendency will be sideways chop. Now it looks like later in the day, they did get a breakout towards what, 3 o'clock in the afternoon on Eastern Standard Time. So you'll notice that chart. Opening range. Well, quite often I will not, if it's a narrow range, I won't trade inside it. If it's a wider range, I may scalp. This is almost an identical screen. Actually, it is an identical screen where the ADX dropped below threshold. And when it dropped below threshold, sideways chop, right? You can't see it here. If I spread this out, this is barely between 34 and 35. 34 and 35. This is running sideways. Well, look at this. This is another, just because it's not a solid line, these dotted green lines, they are actually cyan in color. As they incline, oops, that must be somebody else projecting in my my shark den there. The increase in the ADX is met with a bullish DMI. You think that'll help support price action as it moves higher? And this is just before 10 o'clock in the morning, right? Working our way into a potential 10 o'clock reversal. Ooh, so put 2 and 2 together. Do you think that's a good, nice setup, right? I want you also to notice that this line, as it drops below the threshold, turns yellow. Now in the room, you're going to see it's a horizontal line. Green is long, yellow is caution, get out, or stop trading, right? Same thing here. Does this look sideways chop? You got a couple of different indicators. Visual representation, right? The red background means it was probably a lunchtime trading zone. It is. Look at the time. It's a lunchtime trading zone. So the gray is actually what? Tangled net. And then you've got your price action. There's your dash line, is your opening price. But look over here. These vertical lines they match the screen down below. So yellow is saying caution. Right? So if I'm trading, I'm watching, I may be doing something else on my desk, and I see yellow, I know that I don't want to be in the trade. That's a fair analysis. What do we got here? This is an incline on the ADX. It happens to be red, right? In the room, you're going to see it. They're all horizontal now. But this is the way when I created it, I was creating it in a line. It was just too much information for me, so I flattened it. So now it's horizontal. But you can see here, as it's inclining and your DMI is bearish on top, then you should see selling pressure the same in price action. So if you're trying to get to a target level, let's say you're targeting, oh, this is an old screen, right? 1648, but they still work. We're still using them to this day. If your price action is working its way down to 48, do you think that having an ADX inclining and the DMI on top, bearish, would give you confidence to hold on, right? Hold on for this retracement, this backing and filling here they got going. They started a direction, back and fill. Started direction, back and fill. Okay, so that's where you have the increased heart palpitations and the sweaty palms and the oh no's, right? So hopefully that indicator will help you going forward. It also works very well in stocks. But you got to test it first. You don't just put it on there and trade from it. You want to test the settings and make sure that you're accurate with whatever vehicle. I also watch crude and gold. We don't trade a whole lot of that, but it's a great vehicle. If the S&P mini is running sideways, gold is a great opportunity to maybe scalp a little bit out of the market. So what we have here is, again, I'm just making reference to the ADX and the DMI. The ADX is inclining. You can see it. ADX is inclining. bearish DMI on top. Look at how it was getting ready to set us up, and then you bring in your commodity channel or your momentum indicator for selling pressure to the downside, right? This is today's screen. Pretty interesting, huh? This is one of the patterns that I talk about in my other presentation. It's called a megaphone pattern. It doesn't look like a wedge. It's actually an inverted wedge, and it's called a search and destroy algorithm. We saw it, called it earlier this morning, right at about 9, 10 o'clock, 9:15. We started to see the higher highs, lower lows. This is called a megaphone pattern. It'll generally touch 5 times and then break out. So you got your 1, 2, 3, 4, 5, 6, and broke out to the downside. Why am I showing this screen again? Because, not again, but I'm showing you the screen we use. I still use the same indicators. This right here is your Globex range level, which was a target level of 27.69 and a quarter. That was the target level. These are the bigger banker levels. This is what they're watching. This is where the bigger money is. If this breaks, which I believe it did later this afternoon, if this breaks, it's breaking to the downside. I call it the abyss, right? It's tumbling into the abyss. If you break outside of these two magenta and orange dots, look out below. And I'm not sure where we are right now because I'm in this presentation, but pretty cool screen, right? Just, this is another nugget. If you start to see higher high, lower low, higher high, lower low, that's called a megaphone or an inverted wedge. It's search and destroy algorithms. Be very careful on that trading day. Ooh, another one. This is today's screen as well. Why I cut price action off, I don't know, but this was today's screenshot. The ADX is inclining. What was happening on price action? Dropping, right? The DMI, red DMI on the indicator. Another one. All these screenshots are from today. The ADX is the DMI is bullish on top, and the ADX is inclining. When it begins to incline, the acceleration incurs. So if you're looking for a trade of the day was here, and the ADX didn't kick in until afterwards. What do you mean? You mean the indicator was lagging? Sometimes they lag, but in this situation, I like to watch the momentum indicators tend to lead price action. So if you've got a momentum indicator leading, you've got a bullish split right here, then I'm watching the ADX incline for a potential long. And then what's really beautiful about the ADX is it tells you if you need to hold on longer for your profit targets. I'll tell you how we use our profit targets when you come in tomorrow morning. What's going on here? Ooh, I had to show a yellow, right? So when the ADX drops below threshold, it turns yellow. What do you think's occurring right here? Sideways chop. Pretty cool, huh? If you can simply know when to stay out, it'll strengthen you when you know to get in. Cool? All right, where are we here? So tomorrow, that's a lot. I know I had to speed up. I think the other presenter's coming in here at 1:30, if I remember correctly. So I hope I didn't talk too fast for everybody. I've got a free trial tomorrow. Come on over and just sign up, join us for a couple hours. I leave the screens open the entire day. And how do you get there? You go to tradershark.com, go to the sign up tab, and right there, it's under next exciting event. You'll also see this presentation for investor inspiration. And if you scroll down, just click on the free trial and register. Okay. Well, for investor inspiration for this web, I've got a coupon code of web. I don't charge $3,000 or $4,000 to come in my room. If you want to join us, it's usually about $200 a month. I got 25% off everything right now, 25% off the manuals, 25% off to get into the room to join us. Come on in and see if you like what you hear and what you see. If you don't, no harm, no foul, right? But if you like it, the manuals, while they're not required, I had a lot of people compliment. They're very right down to the very basics when you first start trading, walk you right through into more advanced trading techniques, and they're all digital and online. So I hope that helps. If anybody has any questions, let me see on webinar. Let's see if we got a chat going on here. Is there any questions? Renee, if you can read any questions in here that I may be missing, I can't see any. Any questions for me?
I do not see any for you. If you guys have any questions for Brian, make sure you do put those in the questions box.
That was a lot of information that I threw out there in a very short period of time. So the idea is we need to know when to place a trade to be profitable in a long position, when to place a trade to be profitable in a short position, and when it's running sideways with the indicators that we're showing, when the sideways chop is going to help us protect our capital and not get into the trade. So really the intention of this webinar is to show people when to stay out of the trade. And in the room, you'll learn how we get into the trades.